Welcome to Live in the Markets with Trader Nick. In this show, Nick will cover the latest market trends, whether they're rising or falling. Stick around to hear about trade ideas, latest news, and much more. Remember that trading involves risk and is not suitable for all investors. Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel.
Welcome to my live streams where I take trades on real accounts, no nonsense, no fake MT4 profits. On my streams, you'll usually see me taking a look at software tools that we use to analyze the markets to try and get the latest market trends that are going on. We study things like the Commitment of Traders report, which shows us what institutional traders are buying and what they're selling. We look at seasonality to try and predict and find opportunities in the market based on historical data. Stay tuned for the second half of the stream where we'll bring in guests from all over the place to add commentary on what's going on in the markets. Before the stream starts, I just wanted to jump in and remind you guys that this month only we're doing our biggest sale of the month. If you've been supporting our content and watching us for a while, then you may have heard things like the Edge Finder mentioned or our VIP group where you can see trades being shared by our team. Well, again, right now we are doing our Black Friday sale and I want to make sure you don't miss the price discounts that are available. 40% off for this month only. All the information will be down below in the description, so make sure to check it out if you have any interest. With that said, now on to the stream. That's right, you guys. Today is the final day for the Black Friday sale. Don't miss it if you are meaning to get in on it. I don't want you to miss it. Again, we always get the comments days after the Black Friday sale ends. Hey, I want that Edge Finder. How can I get it for Black Friday? And the sale ends. So don't let it end on you. If you want access to it, make sure to check it out. Euro New Zealand is running nicely here this morning, you guys. We've got the trade open from the stream 2 days ago where we initially took the trade. So we're still running hot. This week's trade is going very, very well with that initial entry up here at resistance. Real quick, as we get started here on the stream, let me remind you, if you're new to the stream, we do these Monday through Friday at 9:30 a.m. US Eastern. I don't want you to miss a stream, so make sure to hit the thumbs up button, subscribe, and click the notification bell. We're going to be doing some chart breakdowns as well as some top trading setups for today. Nick, did you poop today? No, I didn't. Just a little TMI. I haven't yet. It's coming. What's up, everybody? Thank you for being here. Ezekiel, Trading Tradition, King David, PJ Plays Games, Twan. Good to see everybody. Thank you for being here. So a couple things to talk about here. First of all, the trade that I'm in on Euro New Zealand. You can probably see the reasoning behind the trade. In hindsight, it is awesome and very clear. We retested a level of resistance. We drew our fibs from swing high to swing low. And as price pulled back, I ended up picking it up on the short side here at past resistance. So nice start to the trade. And one thing that I really liked about Euro New Zealand was that when we came down to this little counter trend, we actually failed on the buy side to hold this. And that little breakout ended up being a nice flush to the downside. By the way, check out the stream quality. We recently upgraded our streaming service or streaming software to allow us to do 1080p. So it should be clear on your end. Let me know if it's not, because we'll get a refund. Took advantage of that Black Friday sale. So, or I guess it was Cyber Monday, but yeah. If you need a private mentor or possibly a partner in Forex, let me just say this real quick. A partner is a great idea. A mentor is a great idea, but they are not cheap. And getting one-on-one coaching is usually very, very expensive. I actually don't offer that just because this is going to sound so arrogant, but you know, it's very, there's only one of me and there's a lot of people. So I prefer to just do my, you know, my coaching, mentoring, whatever you want to call it. I just share my experience on YouTube. I don't even really like to call it like, oh, I'm a mentor, right? I'm just a guy. I trade Forex. I've shared my experience on YouTube for years and it's all free. So you don't need to spend a bunch of money on anything like that. Let's take a look at Euro USD, which continues to chug higher here. Now, what we'll notice here is that if you're watching Euro USD, recently we've had a lot of bullishness on this chart. Now, I don't have a huge opinion on this one on the long side, but we have to give the bulls the credit. What we can see here is that buyers are pretty dang strong, and each attempt at resistance, each attempt retesting support has been met with a lot of buy pressure, as you can see here and here. So if I'm looking at Euro USD, the directional bias here for me is up until further notice. Now, I'm not actually willing to go long on Euro USD, and I'll talk about that in a second. But what you should know is that in terms of market structure, price action right now is leaning towards the bulls, I would say. You have a major level of resistance here at the previous top. This is going to be your point of interest when it comes to, sell side is pretty active up here in the 1.045. If price is able to get back up to those highs, what we should pay attention to is to see if we can actually, in fact, get a breakout of those highs. If we get a breakout, buyers may have another run here. I think that's the only point on this chart where I'm really interested. Of course, I'm not actually interested to buy euro dollar, and I'll talk about that in a second. Fundamentally, I'm actually pretty bearish on this thing. And so for me, if I was to trade this, it would actually be on breakouts the other direction. Like, for example, if we started seeing support levels fail, right? If we started seeing this scenario, then possibly like sells on retests, that would be more my interest. Why am I short biased on this? Well, it is mostly due to fundamentally, I prefer the dollar over the euro at this point. And we could talk about that really briefly here. The euro USD, actually, let's take a quick look at the market heat map, see what's moving today, and then we'll possibly come back to euro dollar. So here's the dollar crosses. Today, the New Zealand dollar, the Aussie dollar, the pound dollar, the euro dollar, and the dollar yen. These are all up today, whereas dollar CAD and dollar Swiss are down today. On the major indices side of things, you have the UK 100 is up today. If you take a look at euro pairs, look at that euro yen, you guys. Euro yen up tremendously, and yen pairs across the board very, very strong. Seems like the yen is a big loser today with New Zealand yen up, Aussie yen up, CAD yen. If you're trading the yen pairs on the long side, then congrats, you're probably sitting in good trades right now. You've also got Swiss yen up big time today. You've got New Zealand again taking the lead, New Zealand JPY on the long side. And really quite the impressive move for some of these yen crosses. And we'll get into that for sure here today as we discuss some of the pound yen, for example, is one I'd like to talk about, etc. Now, we take a quick look at the euro dollar, like I mentioned. On the euro dollar side of things, I do have a sell bias, but the technical side is still bullish. Now, fundamentally, GDP, inflation, unemployment, interest rates, I'm tending towards selling the euro USD. So I want to be short biased on it, but technicals still telling me to be bullish. So where does that leave me? Well, if I'm fundamentally bearish and technically bullish, there's no trade for me. You guys, if you're a regular on the stream, you'll recognize that idea. It's a pretty common thought process. We like fundamentals and technicals to align on these streams before taking trades. What's up, Sajid? Thank you very much for the donation. I really appreciate that. Making the money tree rain. What is AED? What currency is that? United Arab Emirates. Awesome. Cool. Thank you very much for the donation. I appreciate that. Let's see. What's next? Let's take a look at what charts you guys want to look at, by the way. Let me know. I'll show you guys GJ, which I think GJ, this is an interesting chart. If you guys are watching GBP/JPY, let's mark this up together. I did this really quick on my Instagram. If you guys follow me on Instagram, I just did this chart, and this was a very clean chart on the sell side. And I want to see if you guys can see it, but let's do it together. So here's the thing. The first thing I want you to notice about GJ is we had this beautiful push to the upside, this very nice, healthy upward trend. You can see buys, 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 right? Higher lows, higher highs, right? Really strong upward trend. Then notice when we look over here on the right side of the screen, there's a high, there's a lower high. That is early signs of a potential topping point after breaking. Well, let's make this not so big. This is just obnoxiously big at this point. We had resistance, and if you notice, we actually broke through this level. So let's go ahead and mark that spot on the chart. GJ, from a technical analysis standpoint, looks bearish as it comes up into this zone. And not only this, you guys. So we had the trend line break. Trend line breaks. It even retests that trend line multiple times before collapsing underneath support. Very bearish price action in my view on GBP/JPY. Now, check this out with me. We could draw our fibs in here from this previous pivot point, this very notable point we talked about, and we draw that down to the previous low. Take a look at where price is coming very, very close to. You've got a nice little run that's happened from the lows here on GJ, but notice where we're coming into. We've got a 61.8% retracement just above current prices, which might be an interesting thing to pay attention to going into today's price action. Again, this, in my view, looks very, very sell side heavy with the pound yen approaching past resistance and possibly due to put in a lower high, that sort of thing. Of course, this is another one where I don't have a strong enough bias fundamentally to actually take a trade, but I want to mark it up for people who watch this on the technical side. Again, 61.8 looks like a very interesting level to watch going into today. Keep commenting which charts you'd like to look at. We have Rohan who says, UJ, let's take a look at USD JPY and see what's going on with this one. Up today with a lot of the other yen crosses, and let's do a little bit of a breakdown here. We're looking at the 4-hour chart, and just quick trend line here shows us that we have actually seen a little bit of a breakout. And is this the start to a little bit of bullishness on UJ? Well, let's be careful, but you have a little bit of a inverted head and shoulders concept here, right? Higher high coming in potentially, but still a question mark. We have a question mark right here. Why? Because look at this. If we look left, we do have, in fact, resistance in this area. So resistance is getting tagged as we currently speak. Though we did break out of this trend line pretty convincingly, this is a nice start to a possible bigger move on UJ to the upside. What do you guys think? Do you have an opinion on USD/JPY? Comment it in the chat if you have something. By the way, if you're enjoying the stream, do me a big favor right now. If you're enjoying the free stream, these streams go on every day. Smash that thumbs up button. It really would help to support the content and support the stream. There you go. The like button just popped up on the screen. Hit that like button. Spam it for me. It really does show a lot of love to the stream and helps us continue to put out more content like this on a regular basis. You guys liking the stream is a free thing to do, but it really helps us get the word out, get more people into these realistic trading streams where, you know, we're not hyping up nonsense or anything like that. This is just, you know, real traders, real conversation, real community where we're just trying to do this together each day. And if we can all just improve 1% per day, that's all that matters. USDCAD, Christian says, I'll take a look at USDCAD in just a moment. Let's talk UJ. So looking at UJ, again, big break to the upside here and testing resistance as we currently speak. And as we speak, it just dropped. Wait a second. Look at that 5-minute chart. Something just happened. JPY anyways, currently sitting right around resistance. And in my opinion, you may get something here on the bullish side if we can actually get a close above. So let's just say, for example, that we in fact get, let's draw a green candle here just for simplicity. Let's say that you get a candle that actually closes like this, right? If you get this and then you start getting a pullback, to me, what this tells me is, okay, possible setup. Why? Because look at this. In this case, all we're seeing, we're identifying what the market is choosing to do. We have resistance. Sellers should take over, right? Sellers should control this market. That's what you would expect. But if there's an upset, if something happens that's not expected, where we basically break out with clear conviction above resistance, that could tell us that buyers are now in control of this market and that a retest could be an opportunity to actually get long and see this thing continue to rise. So that's what I'd be watching for personally on USD/JPY. Again, we're currently sitting at resistance. I don't have a bearish bias on UJ. I actually would like to be long on this thing if it could show signs of you know, reversal, and we're seeing early potential on that. What's up, Nate? I watch every morning. Some people need coffee. I need Trader Nick. I need both. Well, I guess I don't. Do I need Trader Nick? That's a little bit of a weird thing to think about. Do I need myself? I don't know. We could get really deep with that really quick. So thank you, Nate, for tuning in. AUD NZD. Yeah, that's a good one to take a look at. Could you look at Aussie Swiss? Carlos, yes. Couple good ones in the chat here. Thank you guys for your requests. Of course, gold is one that we'll do every day. In just a moment, I would like to just really quick take a look at the score chart summary and see if there's anything that you guys requested that crosses over. So USDCAD is on the watch list here today, and USDCAD getting a buy rating. Let's go take a look at that. USDCAD. This was one that we discussed, or I said I would discuss. So breaking out of resistance here a little bit, we had this downward trend, right? And where do we currently sit? Well, let's zoom in. Let's start fresh and see where we're at with USDCAD. I got to give it to the bulls. They do seem to be pretty strong here. And with USD CAD pulling back here this morning, there might actually be something on the long side. Here's your 4-hour chart where we're very close to the 50% retracement. And 50% retracement also happens to have some nice potential support here. I actually think USD CAD might be an opportunity here. So let's mark this up. So again, USD CAD pulling back to support at the 50% retracement. It has a buy rating from the Edge Finder, which is of course a positive factor. Whenever we have fundamentals back in this, that's going to be huge. Unemployment looks good for dollar compared to CAD. Interest rates look good for US dollar compared to Canadian dollar, and GDP growth. This might be a trade, you guys. USD CAD, very, very interesting. USD CAD marrying up nicely. And as you come into this, you might get something where, you have probably a pretty good risk reward here, even if you're going wide with it. I mean, that's an 80 pip stop loss. But if you're talking an 80 pip stop loss just to the previous high, that's 161 pips. That's almost a 2-to-1 risk to reward. Now that's a pretty wide stop. You might be able to be patient on this one, guys. On USD CAD, the preferred entry, in my opinion here, is that 61.8% retracement. Because watch this trick really quick. This is a little trick for you guys on the risk to reward side. Let's say that we just wait and you might miss the trade. Like the trade might go off on the 50% and you miss the trade completely. But let's just say that we just say, who cares if I miss it? Let me just get the ideal entry. My opinion for ideal entry is 61.8% retracement. So watch this trick. I'm going to take this and I'm just going to go like this. What just happened there? The reward just got a lot better relative to the risk. And this is where advanced traders, professional traders, they'll do this sort of stuff all day long. They'll only take trades that give them max potential for minimum risk. Type yes in the chat if that just made sense. If that was something that you needed to hear or something that was helpful for you, type yes in the chat. And also do me a favor, while you're at it, smash the thumbs up button. Let me know that this was helpful to you in some way or another. So, Rodrigo says, hi, Nick, I'm watching from my 9 to 5, not for much long. Hey, well, thank you for tuning in. Back in the day, I used to watch live streams at my job all the time, secretly, or like I would watch like trading live streams. I'd keep it up on my computer. Probably shouldn't have, but hey, you know what? I was committed to this stuff. This was the passion for me. Yeah. So, okay, cool. Thank you guys for the yeses, by the way. Just saw all the yeses come through. I appreciate that. Yeah. So I think like if I'm looking at this, I'm being picky with my trades today, which is probably something I should do, especially considering I already have a trade open. I'll show you guys my trade in just a moment. I like dollar CAD on a retest if we can get it. So what about Euro NZD? This is the trade that I have open myself. So let me show you guys my current trade and why I took it. And remember, this is actually a trade. If you are a regular on the stream, then you watch me take this trade because I took this trade 2 days ago on stream, on camera. Yeah. Angelo, yes, this is something that plagues us. We constantly talk about this and try and get the word out. There are many, many fake profiles, not just of me, but just all over social media. It's a terrible plague of people faking influencers or traders on the internet or just any person of any authority or influence. They fake their accounts and then they try and get people to send them Bitcoin or something. Please never do that. I won't ask you for Bitcoin. I really truthfully don't even DM people. I'm too busy for that, as arrogant as that sounds. It's just the truth. I don't have time to sit around and DM back and forth with people. So if you have any questions about anything that we actually offer, if you want the real Discord, if you want access to our Edge Finder, you can always find it at our official website, a1trading.com. Check that out. That's the only place you can buy stuff from us. Any other place or person is not the right place. We do have a couple associates that work for us, but you can always confirm that it's the right person on our website. So yeah. By the way, we do have a free Discord available. If you want access to the free Discord, do me a favor, click this link we're about to drop in the chat. My team is going to drop that link for you where you can actually sign up to join our free Discord channel, which gives you all sorts of cool stuff. I share all of my trades. So when I actually take a trade, if you want the trade alerts sent to your phone, you have to sign up for the VIP version. But the free version also gets you access to all sorts of free PDFs and helpful things. You get some free guides, some trading guides, technical strategies. You can also see daily trade analysis ideas from my staff that puts out stuff. So if you're not in the free Discord, you're missing out. Click the link that we just dropped here, right there. Thank you, Chandler or James, whoever put that in there. Appreciate you on that side. And yeah, grab that link, join the free Discord. I'm in the VIP and got the Edge Finder. I'm new to trading. What do you think about following the economic calendar? Amazing software, by the way, helps a lot. Thanks, Pablo, for the question and the review. I'll say this. The economic calendar is mostly, in my view, like I just use it to dodge taking a trade right before a news event, or in many cases, I'll use it just to pay attention to like what's coming down the line. Like if I want to trade New Zealand, but then there's New Zealand dollars, but then there's a big news event tomorrow, I might want to wait or at least be cautious about my entry size, etc. So yeah. Grab the Edge Finder with the Black Friday deal. I find it so helpful to have that data consolidated. Max, I appreciate that. Let me just say this really quick about the Edge Finder. This is our last day for the Black Friday sale. Do not miss it. Take advantage of the code. There's a link in the description. If you click that link and you use the promo codes that are in the description, you're going to get access for the Black Friday sale discount. It is ending soon, so do not miss that sale. It is your chance to get access to the Edge Finder for the lowest price of the entire year. And let me just say this. I genuinely, I don't think anymore I will ever trade without the Edge Finder again. It is the most convenient tool ever for looking at so much data so quickly without having to pull up 10 different websites and having to dig through a bunch of articles and stuff like that. This tool, of course, I'm biased. I'm selling it. I own it. I've built it with my company. We have worked so hard to make this the tool that so many traders love. And I know from several of our other traders, even influencers who are using this tool now, this has been a game changer. It's not like we invented, this magic money system. All it does is it takes in all of these different factors and it punches out bias for each one. What's the trend currently? What's seasonality looking like for each of these assets? What are big players doing? Like the smart money traders, are they buying? Are they selling? And it compartmentalizes the whole thing for you. And then you get a watch list punched out every day. To me, like I said, I will never trade without something like this ever again, because it saves me so much time. And I know, I have a very busy schedule. I'm sure many of you guys do as well. Even if it's not the Edge Finder, I would highly encourage you guys to invest in scanners of some sort, whether it's our tools or someone else's. The convenience factor of having a tool like that is an absolute game changer. It helps me find the trades I need to be in and allows me, it probably saves me 30 minutes a day. I'm not even kidding. It is amazing. Hi, Chandler's mom. Thank you for tuning into the stream. So let's keep going. We'll take a look at some more charts here. So I promised I would do gold. So let's talk about the price of gold right now, which currently sits just kind of bouncing back and forth between the previous highs around 1782, and we also have support right around 1735. In my opinion, gold right now is kind of just in no man's land. It hasn't chosen a strong direction. You can see like during this phase, there was just a strong upward trend. That's pretty obvious to even the newest traders, right? But then when we enter into this scenario where we just have back and forth markets, there's not a whole lot that I'm interested in doing with gold. Now, the scenario where we'll probably get a little more interested is if it were to actually break support or break resistance. If we see new demand or new sellers come into this market, it might be a little bit more interesting. So for those of you guys watching gold, this is why personally, I don't love the idea of only trading one asset, because when you only trade one asset, if it just goes sideways for 6 months, you're going to have very few trades if you're a trend follower. Now, if you're a range bound trader, that's great. But I like to have a rotation of assets so that things stay interesting enough for me to take trades on a consistent basis, because as a active trader, we need to have active trades in order to make money, right? So for gold, I'm looking for, like I said, a breakout one way or the other. Either ways, we'll reevaluate. But for right now, gold is kind of just an uninteresting one for me. All right, let's look at some opportunities. What about oil on the sell side? Oil might be an interesting one to just touch on for a second. Taking a look at oil, what we can see is that oil, let's look at the daily chart really quick. Daily chart looking really bearish, right? You've got lower highs coming into this, lower lows. And as we retest this area, we'll go to the 4-hour chart and talk about this. We're currently sitting just around resistance. And there might actually be something here. Let me see. If we zoom that out, you have some potential resistance. Now, this is definitely higher time frame, so I'm playing around here. We are tagging the 38.2% retracement after this entire move, which is pretty interesting, and tagging resistance. Oil looking potentially sell side interesting. Let's keep going. Take a look around the room, see if there's anything else. I'm already in my Euro NZD short. Euro dollar, pound New Zealand. Let's flip it around, see if there's anything on the buy side. US 30. Let's go look at US 30. What's going on with US 30 here today? So for my friends out there who trade the US 30, let's zoom in here. We're looking at the 4-hour chart. And we'll do some markups here. Whoops. Wrong button. Let me try that again. By the way, you guys, if you're enjoying the stream, make sure to hit the thumbs up button on YouTube here. It does help us just to get the word out, get the stream promoted to more people, and try and get this stream in front of some more traders who are looking to improve. So this 50% retracement is actually quite interesting. And notice here, when we zoom in just a little bit on price, this candle had a lot of rejection. Like buyers were pretty strong in this area. And so when we retest this 50%, it could be interesting to try and pick this up here at the 50% or possibly the 61.8% retracement on the long side. So I don't hate this one. US 30, what does it get on the edge finder? +4? US 30 +4. Very good seasonality wise, retail sentiment wise, trend reading, GDP growth. Very interesting. I might actually end up taking this trade today. If I take this trade, you guys will see it inside of the Discord channel. Remember, all of my trades will be shared in Nick's trades, which are right here under trade alerts. Take advantage of, like I said, get the free Discord. If you haven't already, we dropped the link in the chat. We'll do that one more time if you guys would like to grab that there. So, yeah. We do have, oh, that's a good point. We do have news, Freedom Project. Go to the daily chart and be careful. Yeah, we do need to be careful. Although, you know, the thing is, we were able to close above this. This is kind of an interesting little, and again, I don't want to put too much weight on the technicals because yes, they are important, but they're not everything. Technical wise here, we were able to break and close above the previous high here. So I'm interested to see that if this thing has a pullback opportunity. If it pulls back and it just drops, then yeah, I'll bail on this pretty quick. But we might take out the highs again, in which case there might be some excellent opportunities. I mean, this is your daily chart, which looks fairly healthy. Yes, we're sitting at resistance, but you know, you have that potential that we may have more room to squeeze after this big break on the daily chart. So something I'm watching out for. Yeah, we have news, by the way, at 1:30 p.m. Eastern. It's in a couple hours. We have Jerome Powell speaking, which will cause the market inevitably to have some volatility, most likely on the dollar crosses and equities markets. We could see some volatility there. So please be very careful going into that news event today. So yeah. Let's see, what else can we get into? So I have my Euro NZD trade. And my stop loss is in place on this one. If this thing breaks through resistance, if it breaks through here, I'll be out of the trade. In fact, I might actually trail this a little tighter, to be honest. Hold on. I mean, this is a very clear lower high. You know what? I'm actually going to lock in some more stop on that right now, you guys. And we're going to do that. I'm going to share it in both of my Let me get this really quick. I'm gonna trail stops on this one a little bit. For those of you guys in the Discord, just stay tuned with me real quick. I'm gonna go ahead and trail this stop loss right here. So we're gonna lock $630 in on this trade. So 1.67142. 1.6714. There we go. 2. Okay, so I'm going to go ahead and lock in my stop loss there. For those of you who are inside of the Discord channel, stay tuned with me here. I'm just going to update this. Locking in stops behind the lower high made on the hour chart. Nice runner here. Okay. Yes. So for those of you who are in the Discord channel, look out for that alert. I just sent that. So just go over to Nick's Trades here. And then if you go scroll to the very bottom, I just updated my trade. So I took this 2 days ago. I took this actually on stream and I just trailed stops further. So let me show you my worst case scenario here really quick. If this thing breaks through this level now, I'm going to be stopped out of my trade for a profit. So my initial entry is over here. We've moved all this way down. Beautiful. Lower highs, lower lows, looking good. I want to see this thing roll over fairly quickly, or I'm going to take profit on it. That's my current thought process on this chart. And again, the reasoning behind that is we've been doing this high, lower high, lower high, right? I don't want to see this thing put in a higher high. So I just use simple trailing stops to follow a price. FxBigDog will be here very soon. Cool. Yep. So we are currently stops locked in. I mean, ideally, we see this thing show some sell-off pretty quick. I mean, it's looking very, very strong. These are 4 hours of green candles. So, you know, if this thing continues to rise, I'm not here to predict. I'm here to react. So I'll take that profit there. You know, and in hindsight, if this thing rallies all the way up to my stop loss, why didn't I just close it here? This is a dangerous game to play, right? That game of hindsight. It is the crushing blow to so many traders. They can't possibly, you know, understand. Like it's very easy in hindsight. Like, oh, I should have sold here and covered here, right? But this is the challenging part of trading. It's very easy to trade on this side of the chart. It's very hard to trade on this side of the chart. So yeah, just continuing to trail stops and until this market stops me out. Of course, guys, remember the Discord channel. We shared that link for the free one. Click that link, join the free Discord if you haven't already, and we'll meet some of you guys inside of there. Now I'm going to hand off the show. We got another guest. Don't go anywhere. He's going to continue to do more chart ideas, trade setups, and things for you to pay attention to today, right after this. Check it out.
Remember to check the description below if you're looking for a trading community to join.
All righty, traders, good afternoon, good morning, good evening, and welcome to the A1 trading session this morning. I came in a little bit late because I actually got something set up on my trading station that I was going to share with you today. And just about when we're going to go ahead and start, guess what happened? My computer crashed on me. So I had to quickly jump back into the studio here to go ahead and broadcast. So I do apologize. I had something really special for you today. We're going to have to wait for that for next week, and we're going to go ahead and talk about that next week. And what I was going to discuss was regarding a couple of things. Number one, what type of environment are we trading? Are we in a risk on, a risk off environment? First thing, number one. Number two, what is the market telling us based on momentum and trend at the moment right now? We're going to go ahead and address the trend and the momentum that we're seeing currently in the marketplace, whether it's range bound, whether the market's showing some sort of corrective move. Those are the things that we really need to pay attention to when we go ahead and trade. And I know we're heading into the end of the year. We got traders, obviously bank traders, top traders in the world, commercial traders, all taking vacation from about the 15th of December. So really, we've got a good amount of trading left, which is about 2 weeks of trading, solid trading, and then the markets might just move into more tighter ranges. And we have to realize that, because we have to change our strategy and how we're going to look at the market. So it's very important that we understand that. And also, it's very important as we're heading into the last 2 weeks of the year of volatile trading, we got to realize that there's going to be, of course, big traders that are trying to hit their benchmark for the quarter. And so as they go ahead and close out for the year, whether they down or up, they've got to make up. Whatever that is, it's going to happen here in the next 2 weeks. So we're going to expect a lot of volatility in the next 2 weeks as we go ahead and look to the close of the year. Now, with that being said, again, we may have to look at that next week and pay attention to that next week. But this week, let's go ahead and take a look and see what's going on with the market. And we're going to go ahead and address a couple of things here. First thing, number one, what type of environment are we trading? Now, we spoke about a risk-on environment. Risk-on environment means a weaker dollar. It means oil prices, so not oil prices, but gold's going to rally. So we're expecting a weaker dollar, gold rally. Stock market should see some upside move as well. I don't know if I've got the Dow Jones ticker on here. Yeah, I do. Let's go take a look right here. So we should see some upside move in the Dow. Let's just take a look over here as we pop this open. So we've seen a little bit of a downside move today. We see as we opened up around about 0.5% for the day so far. So we opened up lower. We'll go take a look and see what that looks like as well when we look at the dollar index and look at other pairs as well, to see exactly, maybe this could be just a corrective move, right? Because remember, we did speak about a couple of things last week and the week before that, where we said that we're in a risk-on environment, which means we're expecting dollar weakness, but we said that this doesn't discount the fact that there is correction in weakness. So although the dollar might be weakening, the market could still rally. And so these are the things that we certainly want to go ahead and pay attention to. Now, as I go ahead here and take a look at, I'm going to move to the daily time frame, and I'm going to go to the dollar index first. Let's go to dollar index, and I don't know if I've got it over here. Let's see here. Actually, you know what? Let me see if I can open up another VPS yet. Hold on a second here. I think I can do this quickly. And this is gonna be easier. I should be able to pull up some information here to share with you. All right, fantastic. Okay, here we go. All right, so first thing, number one, if we go to all right, there we go. Good, fantastic. If we go to the dollar index right here down below, and we pull up dollar index, here we can see that, again, this is the 1 hour. Let me go to the daily. All right, so this is what the daily looks like right here. And so we had this, and we've been talking about this for some time now, where we spoke about this rising wedge, and we said that when the market starts breaking south, we're going to start targeting the lows of the wedge right here. Now, we could go further down south, all the way down here to around about 12,600. But at the moment right now, we're trading at 13,047. And so if we look at the wave structure that we see right here on the daily time frame, we'll notice that the market has gone ahead and created this inside structure. So we have this large wave right here. We have an inside structure. And so here is why we said that the dollar could see some rally. Even though we're anticipating dollar to be weaker in the midterm, we can have these short-term bullish rallies. And this is what we're seeing right here. The market has gone ahead and found support right here. We have this beautiful little rally. And then the market turned around and head back down south. We had a gap right here over that was not actually over the weekend. This is actually data that's lost here, but so don't look at that as a gap. This is just data loss. And then we had actually the market pull back up here, and it's now in this bullish retracement. Now, we got to look and see what and how long can this retracement be. And so the only way for me to figure that out is to go down to the lower time frame and establish some sort of trend on the lower time frame. Here we go. So this is what we figured out. Here's that wave 1, 2, 3, 4. And you can see right here, we are in a fourth wave structure, and we are anticipating the dollar to fall even further. But at the moment right now, we're in the short-term bullish retracement right now. Now, traders, what does that really mean for us? It means that, and firstly, I want to go ahead and say this, right? When we're in a fourth wave structure, fourth wave can be the most complicated wave structure that you have in an Elliott wave pattern. And with us being in the fourth wave, it means that the market can be really choppy. If you're struggling to figure out what the dollar is, let's say you're trying to figure out what currency pairs to go ahead and trade, if you're trying to figure that out and you're looking at some of the dollar crosses and you're really struggling with the dollar at the moment right now, it's because the dollar is inside this fourth wave structure, which means it's really bullish and bearish. And that means, like, well, that doesn't really make sense, because either you have to be bullish or bearish. Well, no, not necessarily, because the market's so choppy, because there's so much stuff going around. And by the way, we do have the Feds talking today at about, I think it's 1:30 today, Eastern Standard Time. They're going to be talking about the economy. They're going to be talking about inflation, and clearly that's going to influence, of course, their decision as how they're going to go ahead and handle rates. And so that's going to be happening at 1:30. So we're going to get some volatility at 1:30 today, Eastern Standard Time. Keep an eye open for that. Now, as we look at the markets right here, I have a couple of indicators on my chart that indicate sort of trend right here. And on the 1 hour time frame, I'm seeing that the market is testing this 200 EMA right here. So although we're seeing this bullish move in the dollar, we may end up seeing resistance holding here and price moving back down south. Now, if it breaks through that 200 EMA, then it's going to go further up, and it's going to go ahead and target this high right here. So what's going to happen is we're going to see the market trade up a little higher over here. And then at this point, once price trades above that, this will actually become my sell zone right here. This will become the sell zone, which means, traders, that I'll be looking for opportunity to sell the dollar in a more of a mid short-term move towards the next bearish move. Now, not only do I look at the dollar index as sort of a guideline as to what the dollar is doing, but I will go to individual pairs and review individual pairs as we go ahead and take a look at these setups. So let's jump into that. So now that we've got an idea of what the dollar's doing, let's start jumping into some pairs that we want to go ahead and look at and establish what the market is actually doing. So let's go to US dollar CAD. And over here, we can see that dollar has been falling. We're coming up to a support level right here, all right? And so at that support, what do we anticipate the market to do at support? US dollar CAD, we should be expecting US dollar to bounce. Now, I'm going to be honest with you. I like to trade support and resistance, and I have this philosophy about support and resistance, which means support is support and resistance is resistance until proven otherwise, which means that if the market moves to these levels, I would trade based on the levels that I'm seeing, because unless the market proves to be otherwise, which means that it breaks those levels, I'm going to go ahead and try and pick that bottom. Now, I know some of you might frown upon picking tops and bottoms, but it really comes down to understanding where the turning points are going to be in the market and how I'm going to go ahead and address it. Now, I'm going to say this. If you're consistent with the way you trade and whatever you're trading has proven to be successful in the past, if you continue to be consistent with what you do, you will see profit at the end of the day, which means that traders, that a lot of the times when we go in and we find a strategy that really works and we trade it, and then suddenly we get to 1 or 2 bad trades, then suddenly we want to change everything we do again and start all over again. All we got to do is just clean up, which means just start focusing on the risk management, make sure that that is correct, but stick to the strategy and stay consistent with the strategy. And so therefore, I'm going to stick with what I believe is support is support, resistance is resistance until proven otherwise, which means on US dollar CAD right here, as I look at the US dollar CAD, I notice that price did go to this level right here, the 1.618. And it's now pulled back to retest this level. So which means that I'm going to be a buyer on US dollar CAD in the short term, all right, and look for it to rally up a little higher. Now, what would that look like? Well, if I was going to trade this, I would go ahead and do something like this. I'd go ahead and want to go ahead and buy on this. I'd like to enter with multiple positions. So I'd like to go ahead and buy on this Pacific setup. Place any sort of pending orders below the market because I'm buying, right? And I'm going to go ahead and look for 20 pips out of the market. Now, I could chase after a little more than that. I could go ahead and decide that I'm not just going to go ahead and chase after just 20. I could chase after a little bit more on that. But when I know that I'm in an environment that the market's pretty volatile and or there's a lot of indecision there, then taking short-term profits is not a bad idea. All right, taking short-term profits is not a bad idea. And so here, as we look at this setup right here, we could anticipate at least a retracement move based on this right here. Now, this means that the support is just being rejected for a short period of time. Price going to move up, and then it's going to decide. Then we'll see what happens, whether the market continues to rally towards this level right here at 37.33, which is anticipated to be the next resistance level, or we're going to start seeing the market break back down and start a new subswing down, which means that this is now going to indicate that we're probably going to be heading further back down south. Now, if I look at the lows and highs, here's that low right here that was established. There was the last high. So as long as price stays in this sort of like upward trend that we're seeing right here, then which means that we're going to stay above that low. That means that the trend's up. But if we get this bearish move to the downside right here, then we may end up seeing a downward trend. I believe that we found support on the US dollar CAD. I believe that the dollar index, as we looked at, could be seeing a further upside rally in a corrective move of a downward swing. Hopefully that made sense. Let me say that again. So I'm looking at the dollar index to still see some rally, although I'm anticipating that the overall direction in the midterm is bearish on the dollar. And so this rally that we could see on the dollar in the short term could just be a corrective bullish move, which means traders, when we look at a chart like the US dollar CAD and we see price in an upward swing and we anticipate a support level here to hold, this makes sense for us to anticipate price to move further. Again, short-term profits is good in this type of environment of trading, so you can get in, get out, and take your profits. Now, we just had a couple of things coming out this week that I think we also need to pay attention to. There was a couple of things. Of course, China mentioned that they're going to go ahead and remove the COVID restricted policy, which means they call it the COVID zero tolerance, which means they're not going to accept anything on COVID. They're going to have lockdowns. They're going to do all that stuff. That's just, I don't know, it's just absolutely nuts. There's been no COVID case in China, but yet Shanghai has been locked down. The whole city has been locked down. Zero COVID cases have been reported. So this is the thing. They've now come up and said they're going to be changing. They're going to be removing that no COVID rule, which has created a big rally on the New Zealand as well on the Aussie pair or currency. And so we've seen some rally there. We've also seen some movement on US oil. We've seen some movement on US oil. So if we're going to see some movement on US oil and US oil is going to rally, that's based on the rumors, based on the news, And when I see New Zealand CAD, Aussie CAD also rally, there could be a standoff. Then it's going to come back down to, if you're trading New Zealand CAD or Aussie CAD, there might be a sort of like a battle between the two, which means that we've got to assess what the technicals are telling us to decide on what is actually driving the market right now. So let's take a look and see right here. First thing, number one, I'm going to go to my currency strength chart right here. And I'm going to go to the daily right here. And if I look at the daily, which means over the last 48 hours, we have seen some weakness out of CAD right here, number one. And I'm going to change this to the last 8 hours so we can get some more recent data. So more recent data says actually CAD's been strong. So over the last 16 hours, we've seen CAD's actually got stronger. We've seen that the, let's see here, we've got the JPY that's been extremely weak. So we've got weakness out of JPY, strength out of the Canadian dollar. So this actually helps us a little bit to be able to decide on what pairs should we be focusing on, right? So if we're seeing weakness out in JPY, that means that the CAD Swiss would, or at least the Swiss JPY would be a good trade to go ahead and trade, because we've got strong Swiss and weak JPY. Good trade to go ahead and trade. As you take a look over here, we actually seen some profit here on our trade. Let's see here. We're currently up in about 14 pips on our trade that we placed here. So this little bounce that we saw right here is pretty much what we'd like to have seen, and we've seen a nice little bounce right here. Now, let's go to a pair, and let's go ahead and address. Let's go to New Zealand CAD right here. Let's go pop open. Oh, before I do, let's take here. New Zealand is weak, and CAD is strong. This is actually a good combination right here. So we should see that the New Zealand CAD is actually falling at the moment right now. Let's take a look and see how much more of that can we see. So let's go to New Zealand CAD right here. Boom. And there it is. We can see that price as it started to work its way back down. Let's go to the larger time frame. And if we take a look at the larger time frame right here, this is how we've evaluated the New Zealand CAD. We've gone ahead and looked at an inside structure right here. We're giving wave 1. All right, there it is. Wave 1, 2, 3, 4, and 5. And when the fifth wave is completed, we're looking for price to take out the fourth wave, which has happened. We've been talking about this for weeks. In fact, for months, we've been talking about the way the market is structured. When the market bottomed out right here, we're anticipated price to go to 82.45. We've been calling that for a while. Now, we've gone 200 pips above that, which is not unusual when the market's in a strong rally. And we can also see that we're in an extreme overbought condition. So even though we hit that resistance, the market still happened to go through about 200 pips through that resistance. And does that mean that resistance is now broken? And the answer to that is no. This is still a test. Even though it's gone through that resistance, this is still a test, because what's going to have to happen right here is we're going to have to see if price comes back and breaks back below that. You see, this is a daily time frame. Now, if you go to a quarterly chart, a monthly chart, you might see the market with a big wick going, or a big candle going through right here, but not a closed candle, which means that this could still be a closed candle like this that closes below resistance. And if that happens, we could be expecting price to fall back down south. So remember, you have multiple time frames, and multiple time frames can tell you multiple things. So I'm always looking, when I look at a chart, like when I look at a daily chart or even a 1 hour chart, and I see something happen on the 1 hour, and some people are calling it a break of a resistance or support levels, I'm always thinking and envisioning what the larger time frame is going to be looking like. And then I'm always going to say, well, I'd like to see the larger time frame close above or below that level to define whether we actually have a break or not. And then if that happens, then I'll make decisions and then start looking to adjust my trades accordingly. So it's very important to be able to establish what the markets are telling you, not based on just one time frame, but be able to see larger time frames in the same comparison, right? And so New Zealand CAD, if New Zealand CAD starts moving back below 82.45, if you like writing down stuff, write this down. If we break below 82.45 and we see the market trade once again below that level, there's a good chance that the New Zealand CAD could be trying to go back to retest this support down here, which is at around about 79.23. 79.23. Now, why am I saying that? Well, a couple of things here. Number one, because the fifth wave is all the way down here. If the market is going to create this larger wave, 1, 2, right there, and this would be 3 down here, then this would be equating to 4, and that is a move back to support, which also anticipates that we could move down to this level. Now, I'm not going to call the fifth wave yet. I don't think we're quite there. I don't think we're going to see one big move down to the fifth wave yet, which is all the way, by the way, down to around about 72.30. All right, so 0.7230. I don't believe we're going to get there yet, but I do believe that 79.23 is an important level. And why it's an important level? Because traders, we have a nice little bull crown right here. All right. And if the market's going to pull back, this is going to be where we anticipate the right tip to be before price goes back up again. Okay. By the way, we just closed out now on the US dollar CAD. For those that were took that trade, we just closed out the US dollar CAD. My signals just popped up over here. That trade has been closed out. Let's take a look over here. History. And there it is there. There's the US dollar CAD trade. We picked up 20 pips. We closed out with that position right there. So we closed that one out. So again, very simple, very easy. Establishing market support and resistance and establishing what the markets are telling us in the short term can help us define a trade opportunity that could be taken, whether the trend is up or down. We can buy or sell, depending, of course, how your structure looks like on the lower time frame. Let me explain what that means in a little layman terms. So traders, I've had a lot of traders that have gone ahead and messaged me when I go ahead and share my trade ideas. Message me, Big Dog, why are you selling the New Zealand CAD when it's been in such a long upward trend? That's because traders, I believe in trading internal structure in a larger picture, which means that even though this New Zealand CAD is showing an uptrend right here, and in hindsight, we can all see that, right? I don't know if you've seen that ad where the guy always says, we can see it, right? And then when everyone states the obvious, it's like, we can see it. We can see that there's a long upward trend right here. I mean, it's clear. Now, if we look at this right here, what some traders don't see and don't understand is that in this big, strong move that we have right here, we're still looking for the market to create substructure inside here. So what we're looking for right here is these type of moves where the market's doing this, and we're looking at trading the tops and bottoms, just like we did with the US dollar CAD right now, right? When the market dropped back down to support, what did we do? Even though it is a bearish move, we traded against that bearish move and we made some profit. And we're doing that all the time. But what sometimes happens is when we try and yeah, I'm going to say that, and I know you're going to frown upon this, when we pick the tops or the bottoms of a specific trade and we get it wrong, then yes, we can be caught up in positions or caught up in a trade that we hold in multiple positions. And therefore, traders, whether you trading cost averaging or you're trading any other strategy, the number one game in surviving in the Forex or in trading itself is equity management. You've got to manage your risk according to the strategy you're trading. Every strategy has different types of risk tolerance and risk rewards. And you have to adjust your strategy and adjust your, not your strategy, but adjust your, let's put it this way. You have to adjust your risk management strategy in order to be able to accommodate the strategy that you are following. All right. And so that's important right here. So again, looking at wave structure is so important. And as we go to this pair right here, this is the New Zealand CAD. And New Zealand CAD, you can see that we're in the strong rally. Does that mean that we can't sell at the top here? No. If we find something like, let's say we go down to the 5-minute time frame. Yeah. You might be saying, are you kidding me, Big Dog? No. You got a 5-minute time frame right here. If you want to trade the 5-minute time frame, you can do that. all right, you can look for short-term opportunities. As the market breaks through certain resistance and support levels, you can trade it. Now, support and resistance could come in many areas. Highs and lows, trend lines, indicators, Fibonacci, support and resistance comes from Fibonacci retracements and extensions. So all of this stuff can be used. And guess what? Multiple time frames. Woo! Yeah, it sounds complicated, right? So you got all of these different tools, all these different indicators, all these different ways to find support and resistance. And then to throw it in, you've got multiple time frames too. So if you're looking at, let's say, 10 different things on support and resistance, then just multiply that by 5 or 6, depending on the charts that you look at, and you've got then 10 times 5 or 6, that's 50 to 60 opportunities. Do you see how many times? Now, when you have this amount of opportunities, guess what? You get to trade. Take a look over here. This is how we've been trading this month, 22% this month. And the opportunities this month, we've placed 263 trades. 263 trades. That's what we've done. Now break that down into 30 days, and you can imagine per week. Well, divide that by 4, and you're looking at 100 and 130 divided by 75. Call it 75 trades a week. That's what it basically boils down to. All right, 75 trades. In fact, we've traded 35 so far, so it's been a quiet week of trading this week. We've only got 35 trades, but remember, we're only halfway through the week, so we've still got 2.5 days left of trading, so we could easily get to that benchmark of 75 trades a week. All right, now, with that being said, let's jump into some other pairs. Let's go take a look at some trade opportunities here. So moving on to, let's see, we've got a couple of requests. I'm going to grab a couple of requests here now that I've laid the foundation. Let's go ahead and get a couple of requests right here. I did believe I saw pound JPY. Yep, I saw pound JPY from someone right here. So let's take a look at pound JPY. Now, again, if we're looking at pound JPY, then the first thing we have to do here is establish content, right? Or not content, context, all right? Let's go ahead and establish context of the market. Now, what is context of the market? Context of the market would be, are we in an uptrend, downtrend? Are we moving sideways? Are we at a top of a range? Are we at a bottom of a range? Are we at the bottom of an uptrend? Are we at the top of a downtrend? Where are we with inside market structure? That's the important part right here. So as I look at the pound JPY, we notice that the pound JPY has been moving bullish for a long time. And the one thing that I've established right here, based on, and I've just used this internal structure right here, I want to go ahead and put some fibs in here from this low. I want to just see something here. Nope. See this 1.618 right here? That means that traders, that we could still see the pound JPY push a little higher up. So that means that I need to rearrange and readjust my structure right here. So we did say that we're going to be waiting for a range breakout. We've seen how the markets, we had this flash crash right here a few weeks ago in October. But let's take a look over here. So we're still pretty much range bound right here. Now, I guess this is what's good about a fourth wave move. First, number one, I don't think we're going to see anything happening between now and the end of the year with the pound JPY, in the sense that I don't think that we're going to get some big moves. I don't see any news data that could push the market, unless, of course, the Bank of Japan does a verbal intervention or something that intervenes on their currency. And that is possible. I mean, I'm not going to weigh that out. But this is the thing. If I look at the pound JPY right here, and I notice that we're at resistance, guess what I'm going to be doing at resistance? Well, I'm going to be selling the pound JPY. Why? Because the pound JPY is stuck in this fourth wave. Although I see it could possibly want to move north, I need to see it break above that resistance. So resistance is holding. Therefore, I'll be looking for bearish opportunities on the lower time frame, which means traders that because this pair can break up to the upside, stop losses on this type of move would probably be smart. And so if I look over here, and I'm going to go ahead and do some housekeeping here on this chart. If I look over here on the 1 hour chart right here, then what I'm going to be focusing in is just on the downside move. I'm going to look for anything that's bearish that I can go ahead and trade. And I can go as close as this move right here. And I can look at this structure right there and say, all right, there's my wave 1. Here's my wave 3. We're in a fourth wave retracement right here. Let me pull up this. We're in a fourth wave retracement right about here. All right, there it is there. And so here we're seeing a bearish move on the pound JPY in the 1 hour. I think this is a safe trade. Now, if I want to go ahead and trade this, what I'd go ahead and do is something like this. Again, just because I want to be a little more conservative on this, I would want to have to put my stop loss above this high. Now, I want to go remind everyone, if you're looking for a trend reversal right now, looking at the 1 hour time frame, you would have to wait for the market to take out that low there. That's the lowest point right here. That's the low confirmed. If the market's going to go into a downtrend, it's got to take out that low. So if you're looking at a 1 hour time frame and you're waiting for trend reversal in the 1 hour, you're not going to see it as much. You have to go down to a 15-minute time frame to establish maybe even a 5-minute, 10-minute. But let's go to 15 first, and let's take a look here at the 15. So on the 15, this is the low that needs to take out. We need to take out that low in order to establish trend reversal. Let's go to 5-minute. A 5-minute, again, this low right here. So you can see that we're still in a bullish trend, so which means that this might be an aggressive entry point. And how you would enter this is you go ahead and say, all right, I'm going to go ahead and enter a trade, place a trade. I'm going to go ahead and sell on this one right here. All right. I'm going to go ahead and place a stop loss. But I'm going to put these stop losses right here. Let me go ahead and put it 100 pips away for right now. And I'll go ahead and adjust it as it's placed. So let's go ahead and place it first. All right. And so now we're going to establish, all right, so what we're going to do is we're going to place our stop loss probably around about, let's go 15 pips above that. So we're going to look at 167. And I'm going to go ahead and put it at 53. So 167.53 right here, 167.53 is the stop loss, right? And that seems like a good place to place your stop loss based on the fact that we've got support right here. We should be closing out in the next, let's see here, we've got how many minutes left? We've got about 23 minutes left. We'll close out with a bearish engulfing right here. So this looks like a safe place to place my stop loss right here. And let's go take a look and see if we place our stop loss there, where's our target going to be? Well, traders, if you're trend trading, 1 to 2, 1 to 3 risk reward ratios are very, very important. But also at the same time, if you're trading wave structure, I'm going to be chasing after this 1.27. So 164.60. 164.60 is going to be my target to the downside right there. So my stop loss is at 167.63. My target is at 164.60. If I look at the ratio, we're looking at 218 pips, give or take a few, for a stop loss of 74. So if you do the math, you're looking at least a 3-to-1 risk-reward ratio on this particular trade right here. It's actually more than that. It could be almost close to 4. Almost close to 4 risk-reward ratio. So 1 to 4 risk-reward ratio, just a little less than that. That's the trade we have right here. Now, this is, let's go ahead and evaluate this. This is a risky trade, not a risky, this is an aggressive trade. I won't say risky because we've applied good equity management on that trade, right? So it's not risky because we've got risk management applied to the trade. But if we're going to say aggressive, yes, I would say this would be aggressive. Why would I say that? Well, traders, because we're in this uptrend, we got your resistance, we're anticipating a turning point right there. Yep, frown upon the turning point. We're looking at the turning point of this particular pair. And so we're anticipating the market now to complete this rally. It's not confirmed yet because as we looked at the 15 and the 5-minute time frame, that both of them have said that we haven't taken out lows yet, so which means that we're still seeing higher lows and higher highs, which means that the short-term trend is still bullish. So what we have to do is we have to go ahead and say, do we want to be aggressive? If it's yes, this will be the trade. If we said no, we don't want to be aggressive, then what we have to do is something like this. We have to wait for the market to break through those lows, then come back up again, and then start looking to sell at that pullback. All right, that's the option. Again, stop losses will be placed above this level right here. So where we've got the stop loss right now is pretty much where we need to have it. All right, and you have to get into the habit of saying, hey, it's a set and forget trade, which means that once I've established a trade opportunity on that, I've got to go ahead and set my entry, put my stop there, place my target, and just let it ride. Let it go. Don't be that trader that fiddles on the trade. And a typical one, you're probably saying, well, Big Dog, what about trading stop losses? Why not use trading stop losses? Well, the reason why I don't use trading stop losses is because trading stop losses get in the way. Because if the market's going to be a little choppy here, if we're going to see price doing something like this, where price is going to do this, and it can happen, then if that happens, right, then we could probably see the market going ahead and creating this volatility in the spike, where it's just going to create wash and rinse setups, which means it's going to wash and rinse your stop losses at those levels and then move in the direction that you originally traded. So stop losses are, in my opinion, can get in the way when using trading stop losses. And so place your stop loss where it needs to be and let the market ride. This stop loss right here is really just to protect your capital at that point in time. But it's in some ways, you got to realize that stop loss, all right, that stop loss, if you start moving it inside what I call the battle zone, then what you're doing is you're actually a moving target. That's what it really that's really what it comes down to. If you go ahead and do something like this, you are moving your stop losses from this area and you're moving it into this area right here. This is the battle zone right here. And so this is where things can really get tough with your stop losses. And so making sure that your stop losses are placed and kept in that area. And maybe we go past this level of support right here. We can go ahead and start banking in some profit on that. I get that part, right? Because this is a key level of support. And what we don't want to do is we don't want to see the market going down to this level right here, bouncing there, and not breaking and coming back up again. So yeah, I can see why traders would want to protect their capital, protect their position, and go ahead and bank some profits. So all right, that's the only time I would say you could go ahead and move your stop around. All right, let's go take a look and see if there's any other trade opportunity out here. Let's see here. We've got let's take a look here. Where did I see another trade? I believe I saw pound US dollar right here. All right. So pound US dollar. Let's take a look right here. Pound US dollar. And by the way, I've got to keep a track. Oh, I've got about 3 minutes left and I've got Tom coming on. All right. So let's go do this right here. This is the pound US dollar. And let's see here. All right. What's interesting about the pound US dollar is, oh, hang on. I got a comment right here saying no Tom today. Okay, good. So I've got a little bit more time. Fantastic. All right. So this is the deal. If we take a moment right here and we look at the pound US dollar right here, and we notice that the pound US dollar has been range bound. And if you can't see that, let me go to weekly. Look at this this falling wedge right here. Now, with the falling wedge, what do we expect? We expect the market to go ahead and break above the upside and go higher. In fact, based on this pattern, price should be able to go all the way up here to 2.16. That's pretty high, 2.16. So if that's going to be the case, then we could end up seeing the market break it out of this top side of the channel. So we're looking for a breakout of the top side of the channel. Now, we're at the support level right here. And so we're anticipating that price is going to continue to rally. What is that going to mean for the dollar? If pound moves bullish against the dollar, that means dollar's falling, right? So either pound's got extremely strong or the dollar's got extremely weak. But either way, we're now seeing pound strengthen against the dollar. Now, does it mean that the dollar's going to continue, or at least the pound dollar's going to continue to rally in a straightward move all the way up here? No. It means that the market's going to wave. We're going to see this wave structure right here, okay? So in order to be able to identify where it is, where we're trading, we've got to go down to the lower time frame. But what I would be focusing in, now that I know the bigger picture, what I'll be focusing in is how the markets are structured down on the lower time frame in order to be able to trade that move. So let's go ahead and take a look at this right here. So as I go down to the lower time frame, open it up here. Here's the 1 hour. And by the way, whatever time frame you're comfortable with, you can go ahead and use. I'm just going to use this time frame right here, the 1 hour. And if that works for me, then I'm going to go ahead and continue with it. But I notice right here that we had a little structure right here, wave 1, 2, 3, 4, and then 5. And then the market went in and pulled back on a deep retracement, taking out wave 4, which is perfect. And so this is now the next larger wave structure right here. So good. I see structure. I see what I need to work on right here. I'm going to go ahead and take that low high, connect the dots. Go ahead and take a look over here. And here we see that price hasn't quite got to the 1.27 yet, which 12618 yet. So let's take a look over here. Okay, so which means that there is still a little bit of room to the upside right here, right? To get to that 121.74 level. So we still have some upside move. But if the market's going to get to that point right there, guess what? I have to see a reversal on that move. So if I still want to buy pound US dollar, then I might have to go ahead and look for a reversal. But if the market's going to continue to move bearish here, then I might have to look for the market to go back down to this level of support right down there. And that's at around about 114.78. So which means, traders, that there is a trend developing down below here on the lower time frame. Let's establish what that looks like. And by the way, FYI, if something is not set up to your comfort zone, if something's not looking good in regards to the structure that you're looking at, then simply move to something that is looking good and looking comfortable for you to trade. Don't force yourself into a trade just because, hey, listen, everyone's trading pound US dollar. Let's trade pound US dollar. If pound US dollar is not set up structurally that you don't like where it's at, and again, let me explain that. If we're in an uptrend, or we're at the top of an uptrend, or we're on the bottom of an uptrend, if we're in a downtrend, or we're in the top, or we're in the bottom, are we moving sideways, or we're in the middle of the trend? If those things are, if the market's in an area where you're not comfortable trading, simply move to some other pair. Don't trade something that you're not comfortable with, right? And the reason why it's so important to trade something that you're comfortable with is because you're always going to second guess yourself, right? You get into a trade, you're like, I shouldn't have got into this trade, especially when you go into a drawdown. You're going to say to yourself, I should not have got into this trade. It was my wife. She told me to do it. I'm telling you right now, she just PO'd me this morning, and it was because of her I got into that trade. And I don't like that trade. I don't like the way it's set up, but it was not me. It was someone else that told me to do that. All right. We all been there, right? So make sure that you're comfortable with your setup. So let's take a look over here as we dig deeper into the setup right here. And here is the trend. So this is I'm going to go into the 15 right here. All right, so this is the trend that we're in right now. So we are currently right now showing that pound is just, pound US dollar is just broken through that support right here. And we're chasing after this level of support down here. All right, now, very important. If you're looking to get in on a trade right now, let's just talk about this trade. Do we get in now because the market has broken through that support? No, because why? Because I say support is support until proven otherwise. We don't know if the market has broken through the support, because this market could just go back up again and stay back inside that trend. And this will be a false break, which we call a bear trap. So we don't know that. So getting in on this trade right here is not probably the smartest idea. Now, another thing is, you might say, well, what, Big Dog, what if we wait for it to go back up here and we trade over here? Well, that's true, but how strong do we believe that the market has broken through that level? Because if we're going to see a retracement move, we could see the retracement move come back up as far as this to a 506-100 retracement. And then if that's the case, then doesn't the market just go down here and then go back up again? You see, there's too many variables that make us question this trade. And so again, coming back to that comfort zone, if you're not comfortable with the position and where it's sitting at, simply just don't trade it, right? All right, now, let's go ahead and assume that we are breaking through this. I'm going to see probably support right about here. And so at this point, I may want to look for a buy going long here on a short-term opportunity. This might give me a short-term buy. Right now, there's too many variables. If it goes a higher and maybe goes back to retest the backside of a trend line like this, then maybe here I'll go ahead and sell, as long as we have not hit that 1.27. So there's a couple of conditions that I'll definitely put into place if I'm going to be looking for a trade opportunity on this, and not really force myself into something that I'm going to be uncomfortable with. All right. So very important that you establish that and establish what the market is. But remember, traders, what was the foundation that we've laid out right in the beginning of the session? We looked at the dollar index, right? And we looked at the dollar index, and we already established that there's this possibility that the dollar is going to get stronger, at least in the short term. And we called it a corrective move. And so what's happening right now is just pretty much what we started off discussing right in the beginning, dollar strength. And so you could have, at the beginning of the session, already start taking advantage, because at 10 o'clock this morning, let's see this candle right here. This is the 10 o'clock candle right here. So at 10 o'clock this morning, this candle was up here, and the market opened up over here, and the market had already dropped. It has already dropped 87 pips since we began the session. And how did we start the session off? With the dollar index. And what do we say about the dollar index? We can anticipate a rally. This is the reason why we bought US dollar CAD, and we chased after that and made a quick 20 pip profit. All right. So looking at the dollar index, establishing what that looks like that covers most of the currency pairs that are trading against the dollar, you can use that to be able to establish a trade opportunity, as long as the structure and as long as the way it's set up does fit the narrative that you're looking to trade. All right. All right, guys, I think that pretty much wraps up. Let's go take a look at another last thing. We spoke about US oil right here. Let's just take another look at US oil. I believe that US oil is going to stay inside this range until after the year. And the reason why I'm saying that is because the Republicans in the midterm elections have won the House, and they are pushing for U.S. production here in the U.S. or U.S. Production in the U.S. And so that's weird. U.S. production in the U.S. Now, okay, so they want to drill here in the U.S. for oil. So they want to be energy efficient. They want to be oil dominance. So with that being the case, because of that sort of narrative or that sort of push that the Republicans are doing, we know that the Democrats have been doing something different. They've been looking at outside the country for oil. The Republicans are looking to push oil here in the U.S. So I think there's going to be a range that we're going to be sitting in on U.S. oil, which means that only when the Republicans take the House in January, are they going to start pushing for drilling here in the U.S. And so I think that we're going to be range bound. But it's going to be interesting as we look at things change in the new year, how oil moves. Because if we become oil, if we start producing oil here in the US, I believe we're going to start seeing a downside move. I think the Saudis are going to start becoming more competitive on their rate, and we're going to start seeing some downside moves. So let's see what happens, okay? Currently right now, we're at a support. This is the range between 95 and 75 that I believe we are stuck in, all right? So 95, 75, that's the range we're going to be stuck in. I don't believe we're going to see any changes until the end of the year, starting the new year. Just because that, and again, that's not getting into politics. That's just saying we know what the policies are with the Republicans. We know what the policies are with the Democrat. It just is what it is. There's no two cents about it. Now, let's go take a look at. And so, if we're going to see some rally in oil, then that might mean that New Zealand CAD, Aussie CAD could see a further downside move if we don't get China pushing out anything about the COVID policies over the next few weeks. We should see New Zealand CAD, Aussie CAD still continue to move bearish, all right, as oil gets stronger. Now, if we're looking at gold, take a quick look at gold right here. And again, let's go take a look at the daily right here. And so we're still in that risk on environment, and with the risk on environment, we're anticipating gold to rally. And so this is a support level right here. We're anticipating gold to rally to at least 1,799. Let's call it with 1,800. We're trading right now at 1,752. So we're looking at another upside move to that level, and even to 1,832. So 1,832 could be the ultimate goal right here. If it moves higher than that, we'll see what happens. But if you take a look over here, we'll obviously have to readjust if it moves higher. The next move will be 1,890, but this high right there is just above there. So yeah, this would be a good solid target here at 1,832 on gold. Now, clearly, the market is a little range bound here in the short term right here. So wait until the breakout takes place. Buying at support down here would be the best option right here. So anytime the market dips, buy support, looking for the market to break out of this range of the short-term setup. All right. Bitcoin, I don't know if we can throw anything on Bitcoin right now. I think Bitcoin currently right now, we still have not seen any sort of strong move out of that range. Let's take a look over here. Yeah, it's still in that falling wedge right here. Do I anticipate a big move in Bitcoin? And the answer to that is yes, I do. We're not seeing it as of right now. We're still in this falling wedge right now. But yes, when we do break through, I think it's going to be a strong move. I think when we see Bitcoin rally, it's going to be strong. Everyone know Bitcoin's on its way up. All right. Right now, we're not seeing that. And I know with FTX right now, it's created a little bit of concern about the crypto market. Hey, listen here. There's scamsters in all industries. Stock market, we know Madoff. The stock market, currency market, crypto market, any financial market, there are scams out there. Ponzi schemes, scams out there. We know it. So this is just another, FTX is just another scam in the financial market that the market's going to get over and it's going to move on. They're just going to be more regulated. That's really what it comes down to. When we have these type of things, what happens? Regulation becomes a lot more stricter, and that's really what it's going to come down to. Okay. And especially in the crypto market. Yeah. Which is not a good thing, right? In some way. It's these scamsters that create these bigger restrictions in this financial market that make us traders that are trying to do things legit, make it harder for us to do things and do business, and which is always a negative. All right, so this is it where we're at right here. Look for Bitcoin to go ahead and break through the resistance, and then we should be good to go. All right, that pretty much wraps it up for me. Traders, have a fantastic week. Have a great weekend. I trust everyone had a fantastic Thanksgiving. I certainly picked up a few pounds. My wife tells me that every single day. And so I'll be going to the gym early next week. Now, have a great weekend. I'll see everyone back again next week, Wednesday. Make sure you guys come, because there's going to be something great I'm going to go ahead and talk about, specifically something what we spoke about today, but a little bit more detail. Check you out next week. See you guys. Thank you. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.